According to Statistics Canada, home ownership is at an all-time high, but many Canadians are spending more than they can afford. If you're looking to get into the market, some sound advice from the financial experts at Genworth Canada is to save a larger down payment before you buy.
My name's Megan, I'm 23 and I work in banking.
And my name is Steve, I'm 26 and I work in broadcasting, and we purchased our home in July 2012.
We wanted to buy a place because Steve and I were living in his father's basement and he was about to sell, so we wanted to make an investment instead of renting a house.
So our main concern was money, and our first priority was that we had our down payment and our savings in order.
The first piece of advice I would give first-time home buyers who are looking to save for a down payment is to seek out a financial advisor or a mortgage professional as early on in the process as possible, because the sooner they start a savings plan, the quicker they're going to build that down payment they require. It's important to have as big a down payment as possible, because the more equity you have in the home, the smaller the mortgage payments will be. This makes financial management much easier and doesn't stress a person out as much.
The main piece of advice we were given when we decided to buy a home was to make sure that we could pick a location that suited our affordability. With our income, we couldn't afford to live in a major city, so we decided to look elsewhere. And another large piece of advice we were given was to save as much as we could for that down payment, because there are a lot of costs associated with it, so every little penny counts.
Some of the things we did to save for our down payment was we spent more time inside, we didn't go out to the movies as much, we didn't go out for dinner as much. I picked up some extra shifts at work and I got another job, so all that extra income really helped saving.
When we were purchasing our home, we weren't able to come up with 20% for our down payment, but we were able to use mortgage default insurance, and that way we only had to come up with 5% of the purchase cost as our down payment, and that allowed us to get into the house much sooner.
I would advise first-time home buyers looking to build equity in a home to consider mortgage default insurance. Essentially, this is a product that allows a home buyer to put a much smaller down payment down when getting a mortgage. For example, traditionally banks look for 20%. With this product, people can put as little as 5% down and still have the same competitive interest rate as those who put down 20%. When a first-time home buyer applies for mortgage insurance, we're essentially looking at three things. The first is their credit history, normally reflected in their credit score. Then we would consider payment history. How well have they paid their bills in the past? Have they paid them on time? And then thirdly, we're going to consider employment. What level of income do they have to put towards the mortgage payment? How stable has their employment been? How long have they been employed?
When we finally had enough money for our down payment, there was a massive sense of relief. We were very excited, and then a big rush of emotions came right after as well. We were nervous to move in, we were excited to move in, we knew there was a whole lot of work ahead of us, but we were also proud that we were new homeowners and we had something that was going to be our own. The main piece of advice that we pass on to our friends looking to buy their first homes is just, you need to save, you need to budget, you need to understand all of the costs involved. And there's going to be times where you need to cut back on your activities, on your entertainment and things like that, but in the end it's going to be worth it when you have your own home.